It's great to see this lovely crowd, many familiar faces, very enthusiastic, unfamiliar faces. I'm Alex, the Executive Director of Fintechs Canada. We're basically an industry lobby group, but today I'm serving the role of impartial moderator. With me today to talk about innovation in Canada's payments ecosystem are Chris and Hanna. I will let them introduce themselves. Chris.
I was going to let Hanna.
Okay,
Hanna, you go ahead.
You go first.
I'm Hanna Zaidi. I am the VP of Payment Strategy and the Chief Compliance Officer of Banking at Wealthsimple.
Hi, everyone. I'm Chris Ferron. I head up Fintech Partnerships at Visa Canada.
Awesome. So I can't be the only one who's wondering this. We're talking about innovation in Canada's payments ecosystem, and with me are two pretty well-recognized names in the space. Why are Visa and Wealthsimple together right now talking about innovation in Canada's payments ecosystem?
Yeah, I can go first. I'm super excited to announce that we're partnering with Visa to launch a credit card early next year. The credit card space is a $1 trillion industry in Canada, and it's really deeply embedded in Canadians' everyday lives. And we want to reimagine elements of it. We think we can do better. We think we can do things differently. And so to do that, we've decided to also obtain a direct issuing license with Visa. So for those that aren't familiar with what that means, typically Fintechs will have to work with a sponsor bank that owns the infrastructure. They're taking the risk, and ultimately they own the client relationship. No one cares more about your clients than you do. And to imagine the experience that we wanted, we knew we had to own that experience end to end. So we made the investment and partnered really closely with Visa to obtain a direct issuing license. And I'm really excited for what that's going to unlock for us. There's things that we're thinking about bringing to the Canadian ecosystem, like features and functionality that you haven't seen before. And so to give a few examples of things that I'm excited about personally, not committing to whether it's going to be on the roadmap or not, but something to think about of what's possible. So for example, one of the things that I think is really cool is something like single-use cards. So let's just say you're going online and you see this thing that's 20% cheaper. Maybe you've been eyeing that jacket, and it's on a sketchy website, and you're not sure if you should use your card details, but it's a good deal. And so you know what? Because I'm unsure, I'm going to go onto my Wealthsimple app. I'm going to generate a single-use card, and I'm going to use it on this website. And if it gets compromised, everything is tokenized, can't be traced back to me. There's no canceling my card if things get leaked. It's one time. And it maintains your privacy, it prevents fraud. So those are examples of things that are possible now. Other things that are more confirmed that we're going to have are things like rewarding you for good behavior, like if you pay off your balance early. We believe that every transaction you make on our platform should go towards growing your wealth, and a credit card shouldn't be any different. And so, similar to that, if you're familiar with our current Wealthsimple Cash product, we have a prepaid card in our ecosystem. And we have something called investable cashback, which basically means that you as a user, you can decide how you want to use your cashback, whether it's in cash, or maybe you want it to go towards building a position in your favorite fractional stock or your favorite crypto asset. And so, there's a user story that I think about where I think this is a really good feature. There's a 21-year-old woman a couple of years ago who only used the cash card on our platform, and she ended up building a small position in Tesla, and it forced her to open a trade account. Then she got really familiar with investing, ultimately opened up a managed portfolio product, and started saving for a down payment for a house. And so I think the credit card is going to be something that's even bigger and more entrenched, and I'm excited to have more stories like that to share. But also, why Visa specifically? They worked really hard to win this relationship. We spent a lot of time thinking about the benefits, the value add, the partnership. They understand the fintech space really well, and it showed. They've done this 1,000 times in many markets, and so sitting down and working through like different problems, different things. We're new to the space, so understanding that has been great. So I'll stop there.
You could not have said that better. Thank you, Hanna.
You're welcome.
I mean, Hannah's excited. I think the Visa team that's here and the Visa team back in our offices in Toronto are equally as excited to see this partnership come to life. You shared a few examples of what this could look like, and I think like the overarching theme to your examples and to what I think this brings is just a customer-first mindset and a new look and a new vision to how you can solve your customers' problems or challenges. And so we're equally as excited and really looking forward to the partnership.
Hannah, I was going to ask you why Visa. It just occurred to me I should maybe ask Chris, why Wealthsimple?
Well, I think let's think broadly about what a payment network's job is to do. Right? We have this huge investment in infrastructure and in our network that enables payments around the world. It's our job to maximize that investment and to put as much volume or scale that volume as quickly as possible. And clients like Wealthsimple represent a great opportunity to innovate, to bring new products to market, but also to scale. And so we think Wealthsimple has done a great job building their brand, and from the very beginning, we wanted to find a way to partner with them.
I've long believed that the credit card networks are unsung heroes in Canada's fintech scene. Unsung heroes in financial services in general. In the 60s and 70s, when credit cards were first becoming a thing, they were symbolic of this shift in financial services that were making products and services once reserved for the rich accessible to the middle class. Nowadays, credit card companies are helping fintech companies make money when so few others do. Why is Visa choosing to orient itself as partners to fintech companies rather than just sticking with its oldest customer base, which is probably pretty reliable, probably pretty big, probably a very safe bet?
So let me spin a story here. I think, and I like to think about Visa as the original fintech. If you go back to the 1960s, when our payment network was invented and created, we saw a opportunity to solve a pain point for customers and for our clients. In much the same way that fintechs of today identify a problem, think that they can solve that problem in a better way than all the other solutions that exist out there. And so we're aligned to fintechs like Wealthsimple. Our genesis comes from doing exactly the same thing and solving pain points for customers. We think we can do that with Wealthsimple. We think we can do that with fintechs across the board, and that's what our team does. We aim to partner. We're open for business with fintechs, and we're here to solve those pain points.
A common thread in a lot of your answers so far, both Hanna and Chris, is solving problems better, doing things new. Hanna, this question's for you. On some level, the products and services from old players and new players alike are the same in this fundamental way, right? Like a TFSA is a TFSA. Managed investing is managed investing. A credit card, though, can be different at some margins, is largely just a credit card. Making these old things feel new is a fintech innovator's dilemma, I think. What's your philosophy for making old things feel new?
Yeah, it's a great question. It actually touches on sort of the thesis that Chris was just talking about. The way we think about these fundamental products, like you said, like a credit card's a credit card, a TFSA is a TFSA. The difference is around design and intention. And so what I mean by that is at Wealthsimple, we, again, try to design our products and our platform so every transaction you make is going towards building your wealth. That's the intention. And you see that in every sort of feature and product that we have. Things like being able to automatically invest your paycheck, low fee managed products, the highest interest rate checking account, mortgage discount, like just the list can go on. And the intention is to build your wealth, to offer you the highest rates, the lowest fees, no fees in some cases. When you look at sort of what currently exists today in the incumbent market, you take the same products, they're riddled with significant fees. You have transaction fees, account fees, fees for existing, overdraft fees, like just et cetera, right? And then you have really low interest rates. So like everything is just chipping away at your investments and your savings. Same product, different intention. And so, how we do this in a sustainable way, because a lot of folks ask like, how are you able to sustain a lucrative business on a low fee model? And, Wealthsimple was founded, I think we're celebrating our anniversary, this week, our 10-year anniversary this week. It was, thank you. It was founded on the idea of being able to offer high quality, low fee products to all Canadians, regardless of your net worth. And so, we've demonstrated that. 1 in 5 Canadians under the age of 40 use Wealthsimple. 30% of first-time home buyer savings accounts was opened on Wealthsimple. And so our clients are like tech savvy, they want a frictionless experience. And so we're able to offer this, I think in 2 ways, and I'm a bit biased because, I lead a lot of our regulatory strategy, but I think we do this because we have spent a lot of time and investment figuring out our regulatory strategy on how do we structure products in a way that is the desired client experience. Like we're satisfying the intrinsic element of ensuring compliance, but like we care about the customer first. So what is the experience that they want? So we get the licenses that we need. We lobby for the exemptions to have the experience that we need. And then on the flip side, we also have the treasury management capabilities and sort of the sophistication to be able to design really unique business models that are able to sustainably allow for low fees and high interest rates and et cetera, et cetera. So that's how we've created a moat around ourselves when it comes to looking at other challengers. And then when you look at incumbents, like, people ask, well, why don't the banks offer, structures like this, like they could afford it? And I think it's a bit more complicated than that. Like being able to offer like, low fee managed products or zero commission trading or, et cetera, some of the things that we do, that kind of conflicts with having high margin legacy services and can create internal channel conflicts within the bank itself. That money has to come from somewhere, and we don't have those dependencies. So comes down to intention and design.
Hanna, I want to follow up on one thing you said there. You mentioned the importance of compliance, being aware of the regulations that apply to your business and optimizing for that, among other things. More regulation is coming to Canada. If you move money, you will be subject to stricter regulation starting next year than you will have been in the past. If you access customer data, there will be more regulation for you as well. It seems like the government's role in enforcing requirements and supervising is getting stricter and stricter and more aggressive and more aggressive. If Wealthsimple were starting, say, 5 years from now in this world with all this heavier, more burdensome regulation, do you think Wealthsimple would have seen the success it's seen now? Do you think Wealthsimple benefited from starting when it did? What does the future hold for innovators given the increased burden that we're all expecting?
Yeah, it's a really good question. So a few things. So what you're referring to is the Retail Payments Activities Act that is going to impact payment service providers, Fintechs that effectively move money, which is all of them. I think to answer your question on like if we started 5 years ago, would the outcome be the same or similar in terms of where we are? The origin of Wealthsimple was built on regulatory innovation. Like we were the first in Canada to be granted basically no call, like for our robo-advisor. So basically the rule before was that you would have to have an advisor actually call you to open an account. And we advocated for, like, there is definitely an automated way that you can conduct suitability, and this will allow you to scale digitally and offer these products at a significantly lower cost to everybody. And so we were able to do that. And so, like, regulatory strategies in our blood, and so I would say we would figure it out. But I think you raise a really fair point around the broader ecosystem. I think the changes are important. The intention around these changes are important because, you know, if you're following the news of what's happening across the border with synapse and sort of the failure of users losing their funds to certain, like, fintechs under, you know, like, effectively they're not covered by any regulation. So, like, the fintechs that have sort of failed in this instance are, you know, it's caused consumer harm. And so this regulation that's upcoming would actually prevent that from happening. And so this is important regulation that needs to come into place in Canada, but it does come with overhead. Like, there is going to be significantly more compliance and risk management, incident response management, et cetera, like overhead, that fintechs are going to have to spend time with understanding, implementing, and complying. It's important, but it is more friction that existed before in an already very difficult environment when it comes to fundraising, when it comes to finding a bank partner. So it just made the bar that's already really high and difficult in Canada even higher. So,
Chris, I want to pivot to you here. So I love credit cards. I use mine all the time. I am, you know, happy with my provider now, but when you guys launch your card, I'll have to reassess. One thing I do know for sure, though, is that economic behavior is changing. I carry the plastic around less and less. I use my phone more and more. How is Visa evolving with the habits of consumers like me?
You know, the card is just a form factor at the end of the day. And you're using your card for certain purchases, you're using your phone for others, you're making purchases on e-commerce platforms all over. I would say we have a view into what the future looks like on how payments will be made. The card is just one option. And if you go back again to the 1960s when we launched and cards were used and there was a knuckle dragger and it was not electronic in the same way it is today. We have evolved many times since then. I see no reason why we won't continue to evolve. I don't know that we'll be paying with the blink of an eye, but maybe you'll there's lots of future opportunity to iterate and to innovate on how payments can be made.
I sometimes like to tease my Visa friends that you guys are just a credit card, and they tell me, no, we're so much more than that. Can you tell me why Visa is so much more than a credit card? What else are you guys doing?
Yeah,
in the payment space?
We're deeply involved in money movement, and we facilitate money movement around the world in real time with real-time authorizations and all of the same reliability and security that consumers know and love about using a credit card. Those same services and same consistent experience come with money movement. We're involved in all kinds of different value-added services, from risk to marketing and all kinds of different areas there. We really are more than just a credit card company. We're a true payment network and a network of networks.
Careful listeners, I think, should have noticed a bit of a tension in some of the answers that I want Hanna to make sense of. On the one hand, there seems to be a lot of innovation in payments, right? Like, I can pay for something immediately at a store and walk out. I can do that by tapping my phone and having my face scanned. It seems like light years ahead of how it used to be. I used to put in the card, put in my code. Maybe even before that, you had like the what are they called? The credit card imprinters, where like basically it'd be like a piece of paper, they'd give it to you, like what the hell is that? We're so much further ahead of that. Some of the biggest fintech companies in the world are payment companies. There are economic rents being captured. Like there's something real going on here. At the same time, a lot of the discourse around this is there's not enough innovation in Canada's payments ecosystem. We need to modernize our infrastructure. So on the one hand, there seems to be a lot of innovation, but on the other, there doesn't seem to be enough. Can you make sense of that tension for me?
Yeah, it's a really good question. I mean, I feel like you kind of already answered your own question, but go a little bit deeper. I think, so what you're talking about when you talk about, like you can use your iPhone now to accept payments. It could be, a point of sale, or you can walk into an Amazon Go store and use your face as checkout. All of these things are like consumer level surface innovation, and it's being driven by big tech and fintechs. On the flip side of what you're talking about is underlying all of that, the actual infrastructure that moves money. Sort of our Canadian payment system, that requires modernization, and that's sort of what we're talking about. And so what I mean by that, and more specifically in terms of your experience as a consumer, is settlement. We don't have real-time settlement in Canada. Money operates on a 9-to-5 basis, Monday to Friday. And so if you want to send a wire, probably got to go into the branch. It'll take a few days. If I forgot to pay my phone bill and it's due today, I'm going to have to pay a late fee because it's going to take a few days to settle. So money doesn't move and doesn't settle in real time. So, how you reconcile the two is like how is innovation happening? Who is doing that innovation? And it's not sort of the existing infrastructure that we have. It's really happening at the tech and fintech level. Even if you think about like a fintech going to market, for example, in order for you to go to market and have a comparable experience to what you already know, you have to spend a lot of R&D stitching together multiple vendors, multiple partners to get table stakes experience. So like the level of work that you have to do to get a functioning product versus the time that you could be spending actually innovating is pretty significantly high in Canada. Versus if you look at other markets, whether it's the UK, where you have real-time payment systems, open banking, et cetera, that bar is lower. And so, that is what's missing in Canada. And so obviously, like I'm alluding to, for those that are familiar, and I think the previous panel also talked about this, like real-time payment systems, like the promise of real-time rail is 24/7, 365 money movement and settlement. Each transaction is data rich and programmable. There's a lot of promise sort of around what is possible for small businesses, for consumers like us on a day-to-day basis. And I'm excited about that, but it is taking a while. And so obviously, like tech will continue to tech and they will innovate. But again, like you're building on top of duct tape. So
I want to ask you, Hanna, what real-time payment systems will unlock for you. But before I do, I want to just turn to Chris for a second. So I often hear that this new real-time payment system being built is not looking to, step on your toes, so to speak. It's not looking to gobble up your payments volume. It's looking to be a foundation for everyone to innovate. Banks, other payment networks. Does Visa need new payments infrastructure at the settlement level to power more innovation? Or can Visa fill a lot of these gaps by itself?
So Visa has a lot of the building blocks involved, and I think a lot of our building blocks will be used when real-time payments is an actuality in Canada. Our entire business model, though, is built on partnership. And so we partner with banks, we partner with fintechs, we partner with merchants and processors, and there's a number of players in our ecosystem that will remain. So we have been innovating for many years using that partnership model. Even when real-time payments is available, I think we will continue to use a partnership model and continue to work with all the players in the ecosystem. I don't think that changes anything other than it allows those partners to further innovate and to deliver better experiences, solving problems that we don't even know exist today. As Canadians, I think we're accustomed to what's been available for a long time, and we're in some ways complacent. And I think with a real-time rail, we'll have the ability to identify new services that we want. And fintechs and banks will have the opportunity to identify those services and to solve those pain points for us.
I'm going to put you on the spot because I feel like being a little annoying today. So
Thanks, Alex.
is the real-time rail going to be competitive to Visa, or is it going to be complementary, or is it going to be both?
Yeah, I'm going to take the optimistic view. We see it as very complementary to our business because it will allow our partners to innovate, and when our partners innovate, we benefit, we scale at the same time.
You mentioned that Visa has a lot of the building blocks in place, and those will be deployed and will work with and alongside real-time payments when that becomes a thing. Can you tell us a bit more about what these building blocks are?
Yeah, I mean, think about our money movement rail. We're already involved in a real-time money movement rail that can pull money from and push money to any debit card in Canada, essentially. We have great reach. We have a real-time authorizations, and we can put money into accounts very, very quickly. That's an example of a building block that we have built that we intend to innovate on in a real-time payment environment.
Hanna, suppose this system gets turned on sooner than later. What does it mean for you, a real-time payment system? Like, what will Wealthsimple be able to do then that it can't do now?
I'll actually just build on Chris's point, and then I'll jump to that question. I think what's really interesting, so we use debit card funding to fund our accounts at Wealthsimple. And it's great. Like, it's great because we consider it a good funds model, which means that the settlement is instant. We know the money's there. It's harder to pull back. It's verified. There's multiple sort of authentication steps in the process versus like other types of funding methods right now, like instant or bank transfer. But where the limitations are, and I think this is where I'd be interested to know your experience from other markets, is because you rely on partners, they set the limits around how much you can transfer. And the control is on the side of like where the funding is coming from. So although great rail and something that we use and benefit from, it's very limited from the perspective of, I can't move large sums of money. I'm very much at the mercy of where the money's coming from, which is usually a big bank. So, putting you on the spot a little bit, but I think so. Where I think the opportunity is where you are able to take advantage of the existing real-time system, layer on your solution on top of that. You can move larger sums of money, instantly, et cetera. But anyways, I'll let you answer.
No, I think all of those things are true. I think the hope is, along with real-time rail, you also collect more data. And so decisions get better with more data. You have a better ability to be able to decide whether or not that large transaction makes sense and is secure and reliable. So I think there's a few building blocks that need to come along with just simply real-time payments, but I'm optimistic there.
Yeah. Okay, to answer your question, sorry, tangent. So I think you're asking a question like, what does payment infrastructure mean to Wealthsimple? And so again, a little biased leading the payment strategy at Wealthsimple, but it means we want to be your primary financial relationship. So we want you to do everything with us if you're not already. Like, we want you to pay your bills with us, file your taxes, invest, save, etc. And so that means we move a lot of money in and out of our ecosystem, within our ecosystem. And previously, there was a lot of friction. Like, again, you're stitching together multiple partners, multiple vendors. You're creating an experience on top of duct tape, and that wasn't the desired experience that we wanted for our clients. We heard about it every day, caused a lot of challenges, and so we had to figure it out and fix it. And the only way to do that, in my view, was to get direct access. And so the thesis has been the last 3+ years is what is like the stack what is the capability and payment stack that banks have, and how do we make sure we have the same access? And so That resulted in us becoming a member of Payments Canada 3 years ago. We then subsequently got a settlement account at the Bank of Canada for the real-time payment system, which we can't use yet because the payment system doesn't exist yet. But we got a direct issuing license with Visa to issue our own cards. And most recently, we became a participant on the e-transfer network. So we now have much more control over that experience. And our clients expect a frictionless, instant, was supposed to be done yesterday kind of thing. And now we're able to more deliver on that. There's still much more room for improvement, but we're on the path to do that. And that's really important, I think, for the rest of the ecosystem. The good news is the Canadian Payments Act was amended a few months ago, which means that fintechs, payment service providers, will eventually be able to sort of recreate the playbook that I just mentioned, hopefully in a few years, because that's who innovates. If you look at any other market where you've launched things like open banking, payment modernization, et cetera, you have the explosion of companies like Revolut, like Wise, who've really sort of revolutionized things like cross-border payments, innovation around different banking products that didn't exist at the time. So I want to see the same thing happen in Canada, and I think we've set a good precedent. So.
I want to go back to your point on the innovator's dilemma. And Hanna, you just referenced a number of examples. I think the storyline here is nobody thought it could be done until you went out and did it. And this is true of fintechs everywhere, right? We talk to buy now, pay later lenders in the US. Nobody thought they could build big portfolios, a lending in a pay and for model. Many have. Nobody thought Chime could offer a fee-free debit account and compete against the biggest banks in the US. They have. Nobody thought you could move money in real-time cross borders. Revolut has, Wise has, many have. Coming into Canada and looking at what you've built, nobody thought you could do all of those things. Get an account at the Bank of Canada, direct connect to interact. There's many examples. I think that's the answer here. We're seeing it happen in real time. And so that's where the optimism comes, largely because you're paving the way there.
I'm going to try to dampen the optimism.
Thanks, Alex.
You've mentioned the real-time payment system a few times. You've talked about what it could unlock. There's this pretty well-documented belief that Canada's biggest banks are really in control of the show here, right? Which shouldn't come as a surprise. A lot of payment systems and networks came about because of big banks getting together and cooperating on shared infrastructure. So naturally follows that they have control over the purse strings, a lot of influence over how these systems evolve, how they interact with others in the ecosystem. And I think we see varying degrees of control over the variety of, I guess, networks and systems and clubs. Some more, some less. Hanna, if the ones who have presumably the most to lose from building new infrastructure that unlocks all these possibilities are the ones who are in charge of building it, why should we believe it's going to do all these things you think it will?
Yeah, it's a spicy question. So I'll preface, we love our bank partners. We work with all of them. They're integral to our ecosystem. But I think, to answer your question, I think about this from sort of a games theory perspective. Rational actors are acting rationally. Incumbents have built the payment systems. They've set the rules. They've built very lucrative business models on top of what currently exists. And payment modernization, open banking, all of these changes, what they're talking about and fundamental to them and the policy objectives that inform them are opening up that access, leveling the playing field. Everybody pays the same amount to transact versus the current system, which is volume-based. And going back to the concept of settlement, again, the real-time payment system would sort of put a damper on things like overdraft fees, insufficient funds, and sort of those things that are actually significant revenue drivers. And so over time, that's going to become less of a factor. So, I've spent if I'm an incumbent, and I've spent millions of dollars and decades investing in this infrastructure, and then all of a sudden I have to now open it up to a much smaller fintech who's done none of this work. Obviously, I'm going to have feelings about it. So, I think that makes sense. I think where I'm optimistic is, I think we've demonstrated to regulators and policymakers that the world doesn't collapse if you let in a new entrant. We've been sort of accessing payment systems for the last few years now, and everything is fine. I think the bar should be high because and it will be when you have to register under the RPAA and become a payment service provider and be regulated by the Bank of Canada. So provided you meet the requirements and you meet the bar and you've done the work, you should get access. And I think over time, consumers and regulators and policymakers will continue to see the benefits of that innovation, because again, innovators are the ones who are innovating. And I think I'm optimistic about that as well, but it's taking a while.
A lot of consensus is needed to move on these sorts of shared infrastructure projects. Visa offers and operates shared infrastructure for banks around the world. What are some things that you think Visa does particularly well? Because from the outside looking in, you guys seem to do it quite well. You're at the cutting edge of a lot of things. What's the secret?
We sort of seem to have built the business that everybody wants to build, right? I think that the general success story here is that we really put our customers first. And so whether you're a cardholder looking to make a payment in a country that you're traveling to, or you're a business trying to pay a supplier, we really think deeply about how that experience is going to work for both the cardholder, but also for the bank that's issuing the card and the merchant that's accepting the card and all of the different players in our model. And so in much the same way that Fintechs around the world are putting their customers first and are really obsessed about their customers, we live by that same motto. We're obsessed about our customers in every way. And so that's down to the single transaction, but also down to the security and the reliability of our network.
Is it fair to read in your answer that one of the things holding us back in Canada is maybe the projects that are currently underway now maybe aren't putting their customers first, and that's why they're being held back?
I think there's good intention there. I think the intention is that in the future there will be an opportunity to innovate and to bring new services to market, and those services will all be in the interest of the customer. So these things are complicated and they take time, but at the end of the day, I think the customer is in the is in the focus and is sort of the place where this regulation wants to go.
Okay, Chris, another question for you with 2 parts. Visa has seen so many things around the world. Based on what's worked elsewhere, what would you say Canada should do to, one, actually build this real-time payment system, but 2, actually promote innovation in the payments ecosystem more broadly? That can be related to the payment system, or it can be beyond that. It's just what have you learned looking around the world?
So a couple of things. I think a lot of folks would ask, if you ask folks in this room, who do the payment networks compete against? And I think they would probably say each other. The truth of the matter is, though, we're really competing against cash and check. And so, because there's a lot of cash and check still in the market, and there's a lot of ways to digitize that and make that customer experience better. So in places where we've seen regulation work, it's really been to replace cash and check. And it's been really successful in doing it. If you look at Brazil, we've seen a huge amount of cash exit the system and go to an electronic payment that's largely better for the consumer and largely better for all the participants in the ecosystem. That'd be an example of where I would hope we can go, where we look at cash and we look at check that's still in the system in Canada, and we actively try to replace that.
I want to end off with a last question to two of you. I noticed that there are a lot of aspiring fintech entrepreneurs here, fintech entrepreneurs that are in the trenches, and even some students. And so I thought I'd tap you guys for advice here. The payments business is very challenging to get into. Hanna, you used the word duct tape to describe how everything operates. There's a lot of regulation. There are all these, outsourced relationships that just make everything so complicated. What's your advice to someone in the payments business? What's something they could do tomorrow that's underrated that would help them thrive? But keyword has to be the underrated thing. So what's the thing they're not doing that they should be doing?
I could go first. So this is something that I am super annoying with my own team. And when I talk about this, it's so there's this product manager at Cash App, Square's Cash App. He was, I think, one of the founding product managers that developed Cash App. And basically, the way Cash App was created was, they didn't have P2P in the US. They didn't have Interac. And so there was no easy way to send money peer-to-peer. And so they basically, sat in a room for months and sort of beat their heads against a wall and looked really closely at network rules and regulations, et cetera. They went super deep. And they basically stitched together, through the debit card network, being able to push funds from one account to another, and Cash App was born. And basically, the lesson that this product manager subsequently talks about in building products in heavily regulated spaces was to go super deep into really onerous things that most people are too hard, too complicated. We've done this for 50 years. Why would I think about this? Go really deep and think about the actual experience that you want and work backwards from there. Easier said than done, but this is how we've been operating for the last few years around thinking about payments. We're not satisfied with, you can't do this. No one else has done this. There's no way. There's absolutely usually a way, especially if you're an innovator. So go super deep. Read the regulations. I know it sounds lame, but you never know what you find. Literally, that's how we became members of Payments Canada, was I was reading the Canadian Payments Act, bedtime reading. And in 2001, security dealers were added to membership types, but no one had really actually used that path. And we went and applied and got accepted, and that's where it started. So it works sometimes.
Chris, same question to you.
I'm going to go back to my last answer, but I'm going to give you an example. So the common theme across every fintech that we work with and across the way that we work with our fintechs is really obsessing about our customers. I was out for dinner last night with a fintech founder. We were talking about the customer service level that fintech provides to their customers. And I could see the passion that he brought to the conversation when he was talking about responding to Twitter posts and emails from consumers. This is the founder. You wouldn't expect that the top guy in the company is looking at email info at emails and responding to them, making sure that customer's needs are met. I see this across every fintech that we work with. When we work with a fintech, we try to bring the same thing to them. But that's what makes working with fintechs differentiated, because they deliver that experience that's truly unique. And I think it surprises customers when they get it. Anyway, obsess about customers. That would be my piece of advice.
That flatters my prejudices because one of my favorite public intellectuals likes to say they judge a person's competence by how quickly they respond to email. Sorry if I've offended anybody in the crowd. Hanna,
I didn't
Chris,
say anything about timing.
thank you so much for your insights. That's it for today.
Thanks, Doug.